Insightful Value kicks off with a bold look at why Dow Inc. stock is trading low and whether a rebound is on the table. This review is for informational and educational purposes only, not financial advice. Be sure to subscribe and like if you find value in this breakdown. Today's date is July 26, 2025. Dow Inc. is a global materials science company supplying chemicals, plastics, and specialty materials to industries like packaging, infrastructure, and coatings. From a value perspective, the stock looks beaten, but may offer upside if execution improves. Quarterly earnings recently disappointed. Dow reported a second quarter adjusted loss of 42 cents per share, far below expectations, while revenue fell 7% year over year to about $10.1 billion, with persistent margin compression across all segments. The loss triggered a sharp market reaction. Shares dropped nearly 17%, and the company announced a 50% cut to its quarterly dividend, now at 35 cents per share, marking a painful reset for income investors after years of consistent payouts. Historically, Dow paid 70 cents per quarter since 2020, but slashed it to preserve liquidity amid earnings weakness and debt concerns. Margins remain under severe pressure. Operating earnings fell sharply, driven by lower selling prices, weak global demand, especially in Europe, and high feedstock and energy costs. The company is executing an aggressive cost plan aiming to unlock over $6 billion in savings and cash through mid-2026, including asset sales, a major review of European businesses, and project delays like the Path to Zero initiative. Why is the stock depressed? Beyond earnings and dividend changes, analysts lowered targets to around $28, citing structural headwinds, trade uncertainty, and weakening demand. Only a small fraction maintain buy ratings, signaling sentiment remains firmly bearish. Why might now be interesting? The stock trades at historically low valuation, with price-to-earnings ratio below 5, price-to-book near 1, and dividend yield around 6% post-cut, suggesting much of the bad news is priced in pounds. Cost restructuring, asset rationalization, and eventual margin recovery could unlock upside if executed well. Why not now? If soft demand continues, energy prices remain elevated, or cost savings fall short, earnings may remain weak and sentiment stuck. The dividend cut shows caution remains significant. In summary, Dow is not collapsing. It remains one of the largest global chemical producers with strong cash generation potential, but it faces a cyclical downturn and operational headwinds. For disciplined value investors focused on depressed cyclicals with high yield potential and turnaround possible through restructuring, Dow may warrant a place on your watch list, but only if you can stomach near-term volatility. For more analysis on Dow and other undervalued companies, visit InsightfulValue.com, where we break down financial data into clear insights without jargon. Thanks for tuning in. Don't forget to subscribe for more deep dive value analysis, and head over to InsightfulValue.com for further insights.